Polar Capital has reported a drop in pre-tax profit following a challenging first half, but its assets under management, AUM, rose despite £448 million net outflows. The figures the investment manager said its AUM hit £14.3 billion as of the 30th of September, a 3.6% increase on the £13.8 billion it reported at the end of March. Polar said increase was driven by £915 million market movement, currency and performance, but this was partially offset by the £448 million of net outflows it suffered during the first half. The company reported an 8.8% drop in pre-tax profit, which fell to £24.9 million from £27.3 million a year earlier. Basic earnings per share for the 6 months to the end of September fell from 24.3p to 21.6p. Polar announced an interim dividend per share of 8p. Shares in the company fell over 2.5% following the update. Why it's interesting. Chief Executive Gavin Rochussen said that despite the net outflows, most Polar funds experienced net inflows in the first half. The merger of two of the group's Japan funds combined with two large client withdrawals from its Global Technology Fund and Healthcare Opportunities Fund drove the net outflows, Polar said. Rochussen said the first half had been a challenging period for the group and the wider industry, as active equity outflows continue. Across the fund management sector, equity funds have experienced record quarterly outflows as cautious investors move to diversify their portfolios and shift funds into the perceived safe haven of bonds. What Polar Capital said the past 6 months have been challenging, said Rochussen. The ongoing uncertainty surrounding the UK's relationship with Europe has led to a very polarised equity market. Further afield, policymakers are working hard to support economic growth, but the outcome of trade talks and the implications of the US presidential election are significant unknowns, he added. Positioning and sentiment surveys remain cautious, with reported cash positions at high levels and equities underweight, said Rochussen. For more on this story, visit the news article link.